And the CEO, John Mullen, stated there that this is absolutely not the case and that they are working on a recovery plan. It's just that it's still in the early stages. That was basically the story of the article. What they really wanted to know was what was actually going on and whether there was any foul play involved or not. So, in general, crypto doesn't have the best reputation when it comes to things being done properly. The idea is often that the owner of such a crypto startup primarily wants to enrich themselves through token generation. Then nothing is built or they stop building at some point once they've made money. This one wants to show that he is indeed working hard to set this right. So they are working on a recovery plan, a fund of 109 million that should promote the recovery and growth of the ecosystem. I think they want to burn tokens that are still in the market, something you see more often.
Fewer tokens. Apply the money yourself, and then the token should go up. That's the idea. When I look at the whole story, this is, in my opinion, well, I don't know if you know people who lost money with it. I haven't myself. I'm not involved in these kinds of investments. I would also not recommend anyone to get involved with initial coin offerings. You really need to have a good understanding of that market, and you need to be fully immersed in it. At the end of the day, this is, of course, a mega risk because ultimately, if you manage to establish a good funding culture for entrepreneurs with crypto, where one can easily and quite quickly fund a company, now often through crowdfunding has become ridiculously expensive. You end up paying something like 12% to a company that puts it on a website, making you think, well, we could have done that ourselves because the traffic afterwards is often not there. Now, many of those platforms have also become regulated. So crowdfunding platforms have essentially become a kind of mini banks where they do peer-to-peer lending instead of leveraging the deposited money. Break time. Yes, crypto is somewhat replacing crowdfunding, and crowdfunding is shifting towards the small loans that used to come from the bank, and the bank has stopped giving loans to small entrepreneurs and is focusing on larger projects. And even there, you see that banks actually want to get out because banks no longer have a purpose. They don't know what to do anymore. Break time. They have zero vision, zero focus on where it should go. There is also room in the market, but it's just a very difficult market to have innovation in because of those permits. And yes, we are invested in a number of those projects that are trying to really bring about change there because that market is ready for disruption. But these kinds of elements just remind me of the first crowdfunding platforms that went bankrupt, leaving investors with, yes, you have a contract, but through a foundation, that foundation is now with the trustee or directly and no support. Companies succeed and they fail, and more fail than succeed. If we look at the figures from every chamber of commerce in the world, then 95% is gone after 5 years. Only 5% make it, and that's also why you should give an entrepreneur space to enjoy the income when successful, to enjoy the success, because he takes a huge risk. I mean, it starts at that moment, he or she, and there's a 5% chance that succeeds. Any rational person would think, well, I might as well do something else, because if I continue for 2 years, and many also quit too early, many throw in the towel after a year or so, you really need perseverance if you want to start a business. And it just takes years, and then it will come to fruition. It's just a shame that there's a huge jealousy about the success that follows, because it's not an overnight success. It's always an overnight success, 5 years in the making. Nobody wants to wade through that mud just to come out on the other side. Everyone wants to be immediately immersed in the world of social media we live in, to be right there on the other side, because that's how the world looks from that screen where they are lured in by American social media magnates, and now also China, of course, with Binance. But yes, to then bring it back to such a coin and say, oh, it's all scary, all dangerous, and crypto. No, these are the withdrawals of an industry that is developing. Whether you want to invest in it, I myself do not, but there are many who do, and I applaud them because that is innovation. I choose other places to achieve that innovation, but that is innovation. So money needs to go in, money is burned, and ultimately that's what we talk about we do too little of that in Europe. And the only thing we do in Europe, again, about this story, is like, oh, everyone see how badly it's going wrong, see how scary it all is, and at the same time, the European Central Bank is introducing a stable coin. So what are we talking about?
What I find so interesting is that people react very strongly to these kinds of events, and as a result, so much money is just pulled out of the market. What we often forget is that these are just companies. They are simply entrepreneurs setting up a business. The crypto world is really still just a drop in the ocean of the world's entrepreneurship. It's so small. A few years of those startups were helped. If you just look inside those ecosystems and those companies and who they are in contact, it's so small and amateurish compared to a VC world or a private equity world. Relatively so little money there that it also makes sense that 90%, 25% don't make it. They are massively opposed because they all just wander around in relatively small circles. For example, such a mantra that tries to build something truly a vision for the future. The mantra is mainly about real-world assets. They want real assets to combine with the actual online companies. In crypto, You often see that the coins, it's just air. In a computer, just like with our central banks, a number is simply entered, and there's nothing underneath. That's basically what is the case with many cryptocurrencies, because everything they want to build with the money they plan to raise isn't there yet. And then they say, there's no value underneath. No, that still needs to be built. And many of those, in quotation marks, are more like gold diggers. They do such an IPO or ICO and take half the money with them. And they think, yes, my work is done because I've already got the money. So often nothing is really built. Or yes, they are in the real 25% who do try to build something, but just can't manage. They simply don't have the capabilities. But I always find it such a shame when parties like Mantra are immediately labeled as a scam. The future will have to show if that is truly the case. As I saw it, they were all explainable activities. The panic arose because there were large amounts of that coin being moved from one wallet to another in Wales. The CEO was able to explain all of that. So, to take this as an example, you see it very often in the crypto world, especially when the prices have dropped a bit. Then there is always some sort of rug pull talk. Or a company is always singled out that doesn't make it, or that just shows more extreme fluctuations. And that immediately becomes a big hype in the media.
It just shows how easy it is to judge and express all sorts of opinions.
What I find so interesting is that today it has risen by 25% again. Then that man explained how it works, and suddenly we trusted a little more.
Measuring is knowing, and a phone call often solves a lot.
If you have a position of 100 and it goes down by 50%, then you need 100% to get back to the original position. So 25 more, so that's hardly anything, but indeed,
I think it went from 50 to 60 cents.